Joining me now live is Regions Chief Investment Officer Alan McKnight and BNY Investments Chief Economist Vincent Reinhart. Alan, you're on set here with me, so I will turn to you first. Big week for earnings, and we're seeing those big increases, obviously, in earnings expectations. We've got the S&P 500 itself now in double digits, expectations for third quarter growth at 10.5% year over year, tech at 23.5%. Are investors even worried about what Jerome Powell will have to say tomorrow with three of the Magnificent Seven on deck after the close Wednesday?
It's obvious that the earnings are going to drive what's happening in the markets the next couple of days, because then we get Apple and Amazon on Thursday. So we get three big ones tomorrow, two on Thursday. Those five companies make up over 24% of the market cap of the S&P 500. So that's going to drive so much of the market views. But let's not discount the Fed. When the FOMC comes out tomorrow, it's not going to be so much about do they cut. We think it's pretty certain they will. But how much and what do they communicate in the conference afterwards?
Possibility of a 50 basis point cut?
We think it's going to be 25. I think they would really have to be concerned, and the data just doesn't show that right now. Unfortunately, as we say in Texas, it feels like we're herding cattle in the fog. They don't have any
I've
data
heard
out
that
there.
before, my friend. Vincent, the ADP report today showed private sector payroll growth slowing, while traders are betting the Fed will cut rates by 25 basis points, as we just said. But does the Fed have enough economic data to make a decision in December amidst a government shutdown? How can they even read the tea leaves when there are no tea leaves?
There are plenty of tea leaves, including the earnings reports you're talking about. The Fed will be scrutinizing the details of those earnings reports to see what do CEOs and CFOs say about pricing power, about the state of demand, about their spending intentions. Meanwhile, they're talking to the big box retailers, scraping data on prices. They're getting information from the credit card processors to see how much in real time people are spending. They're getting a lot of information. We're more in the dark because they'll be operating more on private information because we're not sharing the economic reports from the government.
Very interesting, Vince. Alan, I'm turning to you. NVIDIA today announcing a slew of artificial intelligence partnerships with Palantir, Uber, Nokia, the Department of Energy, DOE. It seems like the AI chip leader continues to show its dominance in new ways. But does this raise any alarm bells for you on a potential circle economy? We've talked about that, or an AI bubble. Are you a little concerned it's too much too fast?
I think the big question for us is not whether or not AI is going to be a dominant theme for decades to come, but really about whether or not they're able to generate the return from it. So we see these big deals. We see all the announcements. They're doing a host of deals across the landscape. But how much of a return are they going to be able to generate from that? And I think that's across the board what we'll hear with some of these companies the next couple of days. What can they actually generate in return, and what kind of earnings power will they have?
All right, Vince, the market's powering to another record close today, but does this rally have legs? Can it continue? We're all voting yes. We'd like to see that. What will be the catalyst, do you think, for stocks to really push higher here?
AI showing up outside the tech sector. It's when AI gets employed to add to output per worker in other industries that will get a return. And that's the open question. We know they're spending a lot. It's helping capital spending. It's helping aggregate demand. But thus far, it's just crowded out other spending. When will it get used? And also, what we're seeing really is the race to be number one in a sector. Not everybody can be number one. There are going to be losers. How's that going to settle out? Matters a lot for individual firms, matters a lot for sectors. For the aggregate macroeconomy, the stuff's got to get used. We haven't seen that as much yet.
All right, and it matters, of course, to individual investors. Alan, I want to talk about one possible dark cloud on the horizon, and that's a government shutdown. It's day 28. The federal government's still shut down. How do you take it into consideration for your clients' investments?
For us, it's exactly what Vincent talked about with regard to the big box retailers. We're going to hear from them next month. How is Walmart impacted? How is Dollar General impacted? People like Costco. All these retailers, are they actually at the tip of the spear, seeing and experiencing some of the impact of customers pulling back? We're not hearing that thus far. We're hearing little signs that maybe there's a slight dislocation there, and maybe there's a little bit of challenge, but not to the level that a lot of people were forecasting coming into the government shutdown.
That's right. Okay. Vince, what are you going to be watching going into next year, 2026?
My forecast for Fed policy is switching from something about the macroeconomy to more about the political economy. We're going to have a new Fed chair. We're going to get some transitions on the board. A politically oriented board is going to be more willing to cut rates than the current crew. So if you're worried about the longer term path for the federal funds rate, think about the White House first.
Wow. Well, Alan McKnight and Vincent Reinhart, thanks for starting us off with a great conversation tonight. Really appreciate it.
Thank you.